Hello, and welcome to the 7th episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we'll be looking at what's happening in the markets, majorly the currencies markets. We look at the equities markets, the cryptocurrency markets, as well as the commodities markets. So we'll try to understand what's happening, and once we get these, then it will become easy to identify trading opportunities as well as trade from the 7th episode of the market. Sorry for that, as well as trade from an informed perspective. So before I make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hello JG, and welcome to the session. Awesome. Let's get this going now. So the very first thing I'd like to begin with is the economic calendar. So one of the biggest news for today will be the Canadian retail sales, and this is expected to happen at exactly 4:30 p.m. So that's about 30 minutes from now. So in the previous reading, that is in the retail sales, there was an expansion of 0.7%. In this case, today's release, we're expecting a contraction to negative 0.6%. So that's a pretty interesting news story. So let me try and share this live. So besides this, we also had some early information happening early in the day. One is the trade balance in New Zealand, which came out at an extreme negative, way lower than expected. So for those who are new, trade balance is basically the difference between imports and exports. So it basically means that business in New Zealand is contracting, where they're importing more stuff than they're exporting. So besides this, Bank of Japan has been really struggling for the last years in terms of inflation. So they have been suffering with deflation. So one of the key things or the key targets for the Bank of Japan has been to raise inflation to acceptable levels. So as at today's morning, we had the annual CPI, that is core CPI. This is basically the inflation rate minus the food and energy costs. So in the previous reading, it was standing as 2.0%. In this case, it expanded to 2.7%, basically in creating the necessary environment for the Bank of Japan to start reducing the quantitative easing programs. So one of the key challenges that we've been facing with the Japanese yen is the weakening as a result of the quantitative easing, as well as the yield curve control program that they have running active. So going forward, we're looking at the Bank of Japan starting to reduce quantitative easing and potentially looking to hike interest rates. So it's an interesting development looking at the inflation rate, and especially considering that the Bank of Japan is close to achieving its targets. So as we head into next year, we'll be looking at potential strength in the Japanese yen. So as per now, the Japanese yen is expected to start strengthening against other currency pairs. So we could see some form of bearish momentum happening in USD JPY currency pair. So in the Eurozone, the current account came out better than expected. So remember, the Euro has majorly been a net exporter. However, of recent months, that is the last 2 months, we have seen the Euro being a net importer, meaning that it's importing more than it's exporting. So in today's expectation, we expected the current account to be 20.3 billion. However, the data read 8.1 billion, basically indicating that the economic conditions in the Eurozone are improving. So we also had a speech from the RBA Governor Lowy, and that was earlier at 11:30 a.m. So going forward, we'll be focusing on a couple of news outcomes for the rest of the day. One is consumer confidence in the Euro. This will be happening at 6 p.m. Richmond Manufacturing Index, this is the last manufacturing index we'll be looking at for the month in the US, basically indicating the manufacturing conditions in Richmond. So later in the day, we'll be having a speech from FOMC member Miesta, and also we'll be having a Governor Council member Rogers issue a speech. This is a governor for the Bank of Canada, and this will be happening at 8 p.m. So later on, we'll be having German Buba President Nagel speak at 9 p.m. So a lot of speeches today. And at 10:15 and 10:45 p.m., we'll have two more speeches from FOMC member George as well as Bullard. So in last week's meetings, we had some couple of developments. So as much as the market was anticipating a Fed pivot, their speeches, especially from Meister and Bullard, they basically described an environment where the interest rates are not yet restrictive enough to create the right environment for inflation to keep going down. So they're looking to do another rate hike, and this is in December. So potentially we are looking at a smaller rate hike rather than the usual 75 basis points. We are looking at a potential 50 basis points in this particular meeting. So if this happens, we're expecting some further strength in the dollar. So the dollar could continue strengthening towards the end of the year. And then judging from next year, perhaps over the first quarter, we'll be starting to see the dollar weaken. So the most important news for the week will be the interest rates in New Zealand, and this will be happening tomorrow, very early in the morning, and this will be the official cash rate. So interest rates are currently at 3.5%. We're expecting a 75 basis points hike to 4.25%. So remember, among the top economies, one of the highest interest rates is in the US at 4%, Canada 3.75%, New Zealand 3.5%, and UK 3%. So if New Zealand does a 75 basis points hike, it will have arguably the top interest rates among the major economies, basically making the central bank the most aggressive among these others. And this is expected to strengthen the New Zealand dollar against other currency pairs. So later on, immediately after the announcement, investors will also be focused on the monetary policy statement, as well as the RBNZ press conference. So normally, even though we might expect a big spike happening at the announcement of the official cash rate, the major movements are basically focused on the forward guidance that is issued during the press conference. So yes, the news will be at 4 a.m., but the press conference later at 5 a.m. is expected to give a future direction of policy, and this is what majorly the investors will be focusing on. So later on tomorrow, we will look at manufacturing as well as services data. That is the Purchasing Managers Index, both from the Eurozone as well as in the UK. And this is expected to present a contraction environment. And if this happens, then it's expected to weaken the European equities further. So besides this, later in the day, tomorrow, we'll be having the flash services PMI as well as manufacturing PMI in the US. So basically indicating the manufacturing as well as the services conditions in the US. So in the previous reading, there was a contraction in services and a slight expansion happening in manufacturing. So in this case, we're expecting neutral manufacturing, no expansion or contraction. And on the services PMI, we're expecting some form of contraction happening tomorrow. So later in the day, in the US, we'll be expecting the FOMC meeting minutes. So the meeting minutes are a major indicator of potential policy in the next Fed meeting. So a close look at this news might cause a lot of volatility in the markets, especially for USD pairs, for gold, as well as US indices and equities. So besides these, we don't expect a lot of news happening in the week. Remember, we are close to the end of the year, and a lot of new developments are happening, as well as a lot of investors turning to holiday mood or Christmas mood. So one key thing to notice this week is that on Thursday, we'll be having a bank holiday, and this is in the US, and this is basically the Thanksgiving holiday. So besides having the Thanksgiving holiday, there will be slowdown in the markets. So we expect some sideways momentum, nothing much happening in the markets as there will be less liquidity. And at the same time, as we approach Friday, remember this is the Friday immediately after Thanksgiving. So this is basically considered as a Black Friday. So on Black Friday, this is when we are expecting a lot of offers happening in the markets. So we could be seeing a lot of retail chains offer discounts on a majority of their products. And this could spike a lot of sales for the retail sector. So investors will be watching the stocks that are performing in the retail sector. So that's it with the economic calendar. And now we can move on to the top stories in the market right now. So one of the topmost stories that we have been watching is what happened with the oil yesterday. So just to give you some perspective, let's start with the charts. So if we jump right through to oil, if you look at US oil, you notice a big spike downwards that happened yesterday, followed by an immediate recovery in the opposite direction. And now today seems like oil is completely bullish and expected to be continuously bullish towards the end of the day. So what exactly happened here? So we can see that oil was basically trading at around $79 to $80 per barrel before dropping all the way down to $75 per barrel and then recovering. So it's not every day you see oil crashing for $5 within a day and then recover immediately. So what was actually happening is that there was a leak, a rumor, basically saying that the OPEC Plus countries are looking to expand output by 500,000 barrels per day from the December meeting. So remember, the OPEC is a key player in terms of the supply of oil, basically influences supply, and the decisions they make have a direct impact on the price of oil. So when the rumor was happening, price was here at around $80 per barrel, then price drops to 75 and then recovers. So the Saudi Minister of Energy basically announced that the rumor was not true. And in fact, considering the current economic conditions, he hinted that there is a possibility that on the December meeting, they will be looking to tighten oil further, or basically to reduce oil output. So whenever oil output is reduced, then in this case, we expect prices to be moving in the upwards trajectory. So this is what caused the immediate reversal. We can see the recovery after the rumor, and today prices seem to be going upwards. So if you need more on the story, I'll be sharing this on the live chat so that if you have time, you can go through the information and then make an informed trading decision by yourself. So as we proceed, you should know that this particular session is purely educational. It's not a recommendation to trade or investment advice. It's here to help you understand what's happening in the market right now so that you can make informed decisions in your trading and realize more value whenever you're approaching the markets. So that's one of the most developing stories in the markets. So if you look at the charts and you look at the analysis for the price of oil, clearly it has been on a bearish momentum after hitting this particular resistance. And this was way back at $92.5 per barrel. So sharp momentum downwards, followed by some slight recovery. Then last week went down midweek, pulled back a while before pushing all the way down to this level and closing here. So this week, if you look at the open, market opens here, right here, crashes all the way down, makes an immediate recovery. And today you can see that oil prices are now moving in the upwards trajectory. So why is oil moving upwards? So there's a couple of factors that are influencing this. One of the factors is that the OPEC countries are looking to cut production, and this is very positive for oil. So at the same time, there is that potential that the US oil reserves are eventually running out and they will be forced to buy oil in the open market, and this demand is expected to push prices higher. So on the bearish momentum, we know that there has been issues with China, which is basically the largest importer of oil in the world. So China has been experiencing heightened COVID-19 cases, and this has led to a lot of lockdowns, and these lockdowns are basically impacting production as well as manufacturing. And this basically means lower demand for oil and, of course, lower prices. So the developing story or the accompanying story has been highlighted very well by this is Reuters. So not Reuters, but Financial Times. So I just want to highlight this article. So China lockdown reached record levels as coronavirus cases soar. So if you can see, country sticks to zero COVID policy with almost 28,000 new infections reported. So this is something that is becoming more of a concern. Remember, for majority of the world, we tend to consider COVID-19 to be behind us. So it's not as big as a pandemic as it was 2 years ago, 2020 and 2021. So right now, out of our businesses are open. Here in Kenya, everything is operational. In Qatar, the World Cup is running very well. We had a big surprise early in the day where Argentina lost to Saudi Arabia. But going forward, you can read the room and see that out of economies have put COVID behind them. However, for China, it's still a big issue, and developments in how the government responds to higher COVID-19 cases are expected to impact the markets. So the world's second largest economy reported almost 28,000 new COVID cases on Tuesday, with outbreaks in Beijing, the southern manufacturing hub of Guangzhou, and southwestern metropolis of Chongqing continuing to grow. So the country's battle to suppress the virus has battered China's economy, disrupting global supply chains and also threatening world growth. So the general rule is that if China curbs, then the rest of the world curbs. So if they're having challenges in their manufacturing, then we expect stocks to be performing badly. If China is doing really well, then stocks are expected to be performing well. So on the other hand, if you look at the Chinese numbers, one key thing to notice is that interest rates are at ultra low levels, indicating the right environment for economic growth and production, as well as expansion. So at the same time, when you consider the government policy right now, they're doing a lot of quantitative easing, trying to pump more money into the economy to stimulate growth. So with low interest rates and stimulus packages happening, inflation is still not a very big issue in China, then we expect these conditions to be premium for growth. So as long as these conditions remain, so long term, China is expected to be expanding, and this is good. It's expected to lower inflation for the rest of the world, as they produce more goods and suppliers with lower priced goods. But at the same time, the COVID thing is becoming quite a challenge. So if you look at European shares, they've been weakening today, and this is as a result of the fears resulting from the China, as well as expectations in terms of the PMI data, both manufacturing and services PMI, which are expected to indicate contractions happening in the US economy. So as we proceed, if you have any questions, comments, or assets you'd like us to focus on, kindly suggest in the live comment section, and I'll be responding to these directly. So on the other hand, if you look at the crypto markets, they have all been in shambles. Things have been really bad this year. A lot of cryptocurrency coins and projects have been going down. Bitcoin is still in the red zone, just like the technology stocks. Ethereum is still down, recently breaking the lower boundary or the lower support level. So if we look at this directory, I'll just highlight. So Bitcoin was a bit majorly ranging for the better part of the last 2 months. So you can see the sideways momentum here. So Bitcoin ranging somewhere around 22,000 and 17,700 being the support. So this was largely a sideways momentum before the sharp break that happened earlier. So you can see the break happening 2 weeks ago. Market tried recovering, failed, went back down, and has been trading in what looks like a triangle. So if you move to the 1 hour time frame and then you zoom out, you can see the swings here, basically indicating some form of still sideways momentum within a triangle before breaking towards the lower side on Monday, and that's yesterday. So today seems like the market is attempting to find some level of support. So we could see some relief rally happening later in the day. So already from the smaller time frame, this is the 15 minutes chart. You can see in the last 15 minutes, Bitcoin is attempting to recover, breaking the morning's high and perhaps attempting to push towards yesterday's high. So there is that potential that we could see some upwards momentum in Bitcoin as well as other cryptocurrencies. So for Ethereum, it's still the same thing, triangle, jumps down, breaks, and then today, seems to be finding some level of support. And in the last couple of minutes, you can see that there is some form of bullish momentum happening, currently testing early morning's high. And potentially, if this trend continues, then yesterday's high could be a nice target. So this is potentially going to happen. So I don't know whether it will actually happen, but there's a high likelihood that this is a strong support, and investors are finding these prices to be cheap, and you could see some upwards momentum. So besides these, there's still out of fears resulting from the FTX fallout. So remember, after FTX crashed, a lot of firms had exposure to FTX, and these details are being revealed each and every day. So one of the major cryptocurrency projects that have been affected is called Genesis. So Genesis is a crypto lending platform that has a recently frozen withdrawals as well as originations of new loans. And they are still facing challenges meeting client demand. So clients are not able to withdraw their money nor issue new loans. So one of the most recent developments is that Genesis was looking to raise $1 billion in order to support its liquidity and continued operations, but somehow it has not managed to secure these $1 billion. So in the most recent news, they reached out to CZ, that is the CEO of Binance, trying to get some financing from Binance, but somehow Binance declined. So the signs are getting worse and worse for this particular lending platform. And if eventually it fails to honor its debts, then it could contribute to the current downwards momentum. So there's still a potential that Bitcoin, Ethereum, and other cryptocurrencies will continue on a downward trajectory. So we are yet to feel the full impact of the crash of FTX. So some further downside is expected as we head towards the Christmas holidays. And remember, this is basically opportunity to acquire these assets at much lower prices. So I'm not saying that all cryptocurrencies will make a strong recovery. However, if you look at the major coins such as Bitcoin and Ethereum, they still have some very good fundamentals going on for them. So if there's a sharp crash happening in the next couple of days, then it basically represents a premium opportunity to acquire these assets at much lower prices. However, for short-term trading, it might make sense to look for short selling positions. So for instance, let's say Ethereum hits this particular resistance here, then there's that potential that we could see some further selling activity pushing the prices back down. So as per now, the current momentum indicates some further upside, but eventually, if there's a crash happening with Genesis or some further bad news in the market, then downwards momentum is expected. So from the forward chart, after breaking this particular level, notice it went all the way up. This is Ethereum, got to a high of 1,678 before crumbling or back down, erasing all the gains, going beyond support and moving further down. So a retest of this support might be in order. So it's important to mark these levels and identify when they are being retested. So as we proceed, let me try and check if you have any questions and respond to them directly. So hello, Michael, and thank you for the comment. Good insight. Thank you very much. So besides these, we're expecting Fed policy to continue being hawkish. So with Fed policy remaining as hawkish, then we may expect the dollar to strengthen a little bit well. So one of the key targets is USD JPY, which is basically forming very interesting patterns. So remember, the USD has been very strong against the Japanese yen. You can see the sharp momentum. However, if you look at the reversals or the pullbacks, they are increasingly getting wider, indicating that the trend is weakening. So from the first pullback here, or even we go a little bit back here. So this pullback was very small or very minimal, then a bigger or a wider pullback, followed by an even wider pullback, and the most recent pullback is even stronger. So this is indicating that the trend is weakening. So the upwards opportunity is getting smaller and smaller. So besides this, it's also important to notice that there's a strong bounce here from this lower trend line, so around 107.6. So from the forward chart, you can see the sharp fall lasted about 4 weeks. Last week's was largely sideways. So you can see the triangle here, market oscillating in a sideways momentum before breaking the upper trend line. So the breaking of the upper trend line here was quite significant yesterday, which led to a nice rally all the way up to this particular resistance. Didn't quite get to 142.4, which was the previous high here, before pulling back. However, the pullback doesn't seem at all that strong. So if the dollar index remains strong, then there's a potential that the USD JPY will continue on the upward trajectory. So a short-term target for day trading would be the previous high of around 142.4. So some further upwards momentum is expected considering yesterday's price action. So some further upside here could be in order. Maybe if we break 142, then 145 could be a nice target for USD JPY. So as for the major pairs, if you look at pound USD, has been quite strong momentum after hitting this all-time low. So in my trading career, I've never seen the pound USD trading this low at 1.0333. So this was the first time ever, and a lot of investors saw the opportunity, bought the pound USD massively and reversed prices upwards. So since then, you can see the sequence of highs and lows. So the highs are getting higher and higher. So from this low to the next low to the next low, you can see they are getting higher and higher, indicating a very strong bullish momentum. So as for the most recent price action, seems like things are cooling off. So if you look at these, it's not significantly indicating a strong bullish momentum. And also, if you look at the resistance here, it seems like the market is trading sideways. So if you're a pound USD trader, you might want to mark these levels here for the last couple of days, where 1.194 seems to a major resistance level. So this is 1.195, sorry. So 1.195 might be today's target if the bullish momentum continues. But if the price was to pull back down, then we'll be looking at 1.18. So 1.18 is right here. So key price levels for the pound USD, 1.18 and also 1.195. So this is the 1.18 level. So as for today, since momentum seems to be bullish, there's that potential that the pound USD will complete the journey and eventually get to 1.195. So as for the Euro USD, you can see the sideways momentum to trading in a triangle. So the triangle was right here before breaking towards the lower side. So immediately after the breakout, got to the lower trend line. Notice this trend line has been holding since the 3rd of this month. So after breaking this trend line, seems to be retesting this trend line continuously. So if the dollar strengthens, then this might be an opportunity to look for a short selling position in Euro USD. So as per now, in the last couple of candlesticks, there seems to be some form of bullish momentum since yesterday, or at the same time, it's more or less looking like a flag. So from what I'm seeing here, some strong bearish momentum Friday on Monday. And then if you look at a smaller time frame, this is the 15 minutes chart, and then you zoom out, then you will identify some form of flag formation. So the flag that has an upper boundary as well as a lower boundary here. So any break outside these boundaries might indicate the direction of the market. So a break downwards will basically imply continuation of the bearish momentum. So the bearish momentum can easily be identified here, which lasted for about 24 hours. So in this case, if there's a break downwards, then we go down. And if there's a break upwards, then we basically look at a reversal of this original move here. So that's it with the Euro USD. So as for equities, we know what has been happening, strong bear market since the beginning of the year. So you can see the highs here and here. And the bottom seems to be stuck at $10,596 per share. And this is for the US tech or basically the NASDAQ 100. So after this bottom, we saw a very strong rally happening here, and also a pullback, another rally here, and now seems like the market is pulling back down. So after this sharp rally last week was a very sideways momentum, and this week doesn't seem at all very volatile, especially considering what we mentioned earlier, that this week we are seeing a lot of traders get into holiday mood, where we'll be looking at Thanksgiving as well as Black Friday. So overall, it's important to notice that the market is within a consolidation. So breakouts could be happening towards the end of the week, or the market could trade sideways until the holidays are over. So clearly, for the NASDAQ 100, this is trading within a triangle. So a breakout might imply some further momentum in this particular asset. So as for the US 30, that is the Dow Jones, notice the bearish momentum and how it has been happening. And they formed a very nice double bottom pattern here, basically indicating a reversal. The double bottom is where the market went back down, up, and then after retesting the area, rallied all the way up. And if you count the weeks, this is a 6-week rally before getting into the consolidation. So this week marks a sideways momentum. with the upper limit happening to be at $34,000. So $34,000 per share seems to be the major resistance level, whereas if you look at the support level, seems to be varying, but a closer look at the smaller time frame, which is the 15 minutes chart, indicates still some form of a consolidation or sideways momentum following this particular path here. So there's some very nice trend lines indicating the consolidation where it's happening. So as we enter the New York session, there's that potential to reject this area here. Remember, nothing is changing fundamentally until we get the speeches which we saw in the economic calendar. So as per now, it seems like the market might be rejecting these and going back down. So a nice target would be somewhere along today's low, 33,635. And remember, whenever you're trading such a pattern, it's important to look for confirmation here and see whether there is a strong entry by sellers. So anything that will look like this, a strong tail towards the upper side, towards the resistance, and a strong rejection would indicate a movement in the opposite direction. So if something like this was to happen and then price moves down, then it's basically your signal to go short on target lower prices. So that's it for the Dow Jones. And lastly, one of the most contested trades for the month has been Chronos, which is basically the native token for cryptocurrency exchange Crypto.com. So Crypto.com also been exposed to the FTX crash. Nobody really knows the extent of how much they have been hit, but there's a lot of research and developments happening in the story. So besides moving sideways for quite a period of time, for a couple of months, there has been a sharp sell-off from 0.125 to the current price level of 0.08 and also a bottom of 0.05. So it's currently in a consolidation zone on the 1 hour chart. So you can see this sharp swing and then up and then back down and then up and down. So some further breakout might represent a trading opportunity in this particular cryptocurrency project. So if you have any questions for me, I would like to respond to those questions right away as we progress with the session and approach the end of the presentation. So hello, Met Mboni, welcome to the session. Any questions or comments for me? All right, if there's no other question or comment for me, then I would like to finish with one particular asset. This is the most traded asset with FX Pesa, and this is gold. So I want to look at gold and the various patterns that have been happening in gold. So clearly, gold has been on a bullish momentum before changing direction. So from the 1 hour chart, you can identify the movement easily. This was the prevailing trend. So from the lower side, you can also see the resistance and the path it has been following. So at the same time, it's important to notice that there is a key book pattern that was formed earlier in the week, and this is a head and shoulder pattern. So this was the first shoulder, and the market went neckline at around 1754. Then market went up, found another high, went back to the neckline, forming the head. So the beginning of this arrow is the head, the first shoulder, and also the second shoulder was formed here, and the market went back to the neckline. So what we're experiencing here, just to make sure that everyone understands the pattern. So a movement upwards, market goes back down. Another movement upwards forms the head, back down, another movement upwards forms the other shoulder. So this is a book pattern indicating a reversal in price action. And now you expect some bearish momentum, and this is in line with the strengthening dollar. So immediately after the break, notice what happened. Price kept going down. So yesterday was majorly bearish. And then after this bearish momentum, the market went back to retest the neckline. That is 1754. Didn't quite get to 1754. Seems like the selling momentum is very, very strong. And now you can see in the last couple of candlesticks, it's basically indicating some bearish momentum. So now that the pattern is complete, you already have a trend line here from the head, shoulder, and now the current price action here. So price has already hit this level here. rejected and is now bound to go downwards. So this seems like a potential opportunity that might have some strong bearish momentum. So potentially, I am expecting gold to continue pushing back down, perhaps to the previous low and even lower. So this might be a nice target for gold short selling positions with the stop losses close by on the previous high where the market was unable to break. So this is one of the key trading ideas for today. Thank you for joining the session. I hope to see you guys on the next session. So I've covered gold. So I think I've responded to your question, Zombol. Thank you for the analysis, most on Euro USD. Thank you, Humphrey. Thank you, Metmboni. Thank you, Humphrey. I appreciate you guys. I hope to see you on the next session. So we have already covered Euro USD, Pound USD. So remember, the session is being recorded on YouTube Live. So in case you need any clarification on the presentation, just go through the session again, and then you'll be able to grab those points on your own time. So thank you guys. See you on the next session.